All right, let's get right into it. Something massive is shaking the crypto world to its very foundations. And no, this isn't just another headline. This is Wall Street making a huge strategic power play on Ethereum. And honestly, the shockwaves are just beginning. So let's break down exactly what just happened. Our source for this deep dive kicks things off with this incredibly powerful headline. It translates to Wall Street launches its attack on ETH. Now, don't think of attack as something negative. Think of it more like a strategic offensive in a chess game, a decisive, calculated move. This is the big money establishment saying, okay, we're done watching from the sidelines, we're getting on the field. So here's how we're going to tackle this. First, we'll look at the specific 1-2 punch that Wall Street just landed. Then, we'll dig into the market's instant, almost explosive reaction. After that, we'll explore this weird situation, this great paradox of extreme fear in a market that should be on fire. From there, we'll map out what could happen next and wrap it up with 2 key metrics you absolutely need to be watching right now. Let's jump straight in. Look, this wasn't just one random piece of news. This was a coordinated set of events that, when you put them together, represent a truly seismic shift for the world of decentralized finance. Okay, so this slide lays out that 1-2 punch perfectly. Punch 1, BlackRock, the world's biggest asset manager, files for a staked Ethereum ETF. That word staked is everything. It means they don't just want to hold ETH, they want to get in on the action, earn the rewards, that sweet on-chain yield directly from DeFi. And then punch 2, happening right at the same time, the SEC gives the all clear to Ondo Finance, a platform that tokenizes real-world assets. The investigation? Over, with no charges. People are calling this a golden license. It's a massive regulatory green light for an entire sector of crypto. So here's the bottom line. These 2 events are absolutely not a coincidence. This is a unified signal coming from the biggest player in finance and the most important regulator in the game. And the message couldn't be clearer. DeFi and smart contracts are being recognized as the future. Okay, so how did the market take this news? Well, the reaction was pretty much instant and incredibly powerful. We saw immediate shifts in both prices and where the money was flowing. No surprise here, Ethereum absolutely led the charge. It shot up over 7%, blasting right past 3150. This was a direct, clear-as-day reaction to that BlackRock news. But you know what? The excitement didn't just stop with Ethereum. Zcash, a privacy-focused coin, just exploded, jumping over 13%. This shows you that investors are already thinking 2 steps ahead, betting on other areas that are going to benefit from this institutional wave, like privacy and projects related to real-world assets. And it wasn't just an ETH story. The whole Layer 1 ecosystem got a major boost. Solana had a really strong showing, climbing over 8%. It's like that old saying, a rising tide lifts all boats. And right now, that tide is institutional legitimacy. But, and this is a big but, here's where we have to be smart. In the middle of all this incredible excitement, a major warning sign started flashing. Not every big transaction you see is what it looks like. And this is what our source is calling a liquidity trap. Right as the market was pumping, a $4 billion Bitcoin transfer from Tether was spotted. Now, if you're new to this, you might see that and think, wow, someone just made a massive buy, and you get that FOMO feeling. But the on-chain data tells the real story. It was just a custody transfer. They were just moving assets between wallets. No new money was coming in. It's a really important reminder to be careful of that artificial hype. This all leads us to the absolute core of what's happening right now. This massive, almost unbelievable disconnect between what the fundamentals are telling us and how the market is feeling. Let's really dig into this great paradox. The source material uses this single, really powerful Vietnamese word to describe this moment. Hấp hoi. It basically translates to being in a critical condition or at a tipping point. It just perfectly captures this feeling of incredible urgency, like we're balanced on a knife's edge right before a historic move. And this chart, this shows you exactly why we're at that tipping point. On one hand, you have these unbelievably bullish catalysts just pushing everything up. But then, on the other hand, just look at the market sentiment. It's at 20. That is deep in extreme fear. This giant gap between the facts and the feelings is what our source is calling a perfect divergence. And it's one of the most irrational setups we have seen in a long time. So what does a divergence like this actually mean? Well, according to the analysis, when retail fear is at its absolute peak, right when institutional money is finally showing up to the party, you get the perfect fuel for a final acceleration phase. Now, historically, this phase is wild, super volatile, but it's also where you can see the most explosive upward moves in price. Okay, so we know we're at this critical tipping point. Let's pivot and look to the future. What can we actually expect to happen next, both in the next couple of days and over the next few months? So in the super short term, the playbook seems pretty straightforward. The hot sectors are going to be real-world assets and liquid staking tokens. They're the direct beneficiaries of all this news. On the flip side, if Bitcoin dominance starts to climb, which is Bitcoin's share of the market, you could see money flow out of pure meme coins and small-cap alts that don't have much utility and consolidate into the big-name players.
Now, let's zoom out. The long-term picture is just as fascinating. The institutional race has officially begun. We're seeing huge structural shifts, like stablecoins already blowing past Visa and MasterCard in transaction volume for 2024. In Washington, new laws like the Genius Act could legitimize the whole space even further. And just look at corporate America. The number of public companies with Bitcoin on their balance sheets has jumped from just 1 to over 75. The big takeaway here is that this final leg of the cycle is shaping up to be absolutely wild.
With so much happening all at once, it's easy to get overwhelmed. So let's cut through the noise and focus on the two specific data points our source analyst is watching like a hawk. First up is that fear and greed index we've been talking about. It's sitting at an absurdly low 20. If we start to see that number climb in a sustained way, it'll confirm that retail sentiment is finally waking up and smelling the coffee. Second is the long-term holder supply. This metric shows us that the smart money, the people who've been here for a while, they stopped selling when Bitcoin dipped, and now they're starting to buy again. That's a huge signal that the selling pressure is probably easing up. And all of this leads to our source's personal strategic takeaway. And of course, this is not financial advice. The philosophy is really simple and contrarian. Extreme fear is a signal. As they put it, when fear reaches 20, that's when I buy. It's all about using that bizarre market paradox as a potential opportunity to get into high-conviction assets like ETH and RWAs. And finally, let's keep an eye on the calendar. We've got some key dates coming up, all centered around the next Fed interest rate decision. The market is expecting a rate cut, which usually means more liquidity and is bullish for assets like crypto. And in the background, we've still got that ongoing debate in the Senate about the Genius Act for stablecoins, which is definitely something to watch. So, there you have it. That's the current landscape. We've got this perfect storm, a massive divergence between fundamentals and fear, huge green lights from institutions, and a market that is just coiled up with tension. As the slide says, all the signs are pointing to the final acceleration phase of the cycle. So really, the only question left is, are you ready?